Luando Franklin is my name, a Chief Executive Officer and lead tutor at FCO Accounting Institution Center. I bring you yet another video on this channel. And in today's video, we are going to look at accounting for depreciation. Basically, we'll look at the asset account, the allowance for depreciation, and the disposal account. For you to be able to understand properly, I would recommend that you refer to series number 1, a video which was done on the double entry concept and the common items used in accounting. You also refer to series number 2 video, which was done, which focused on entering transactions into the cash book, posting to the ledger, and extraction of the trial balance. You also refer to series number 3, a video which was done on the types of errors, those which affect the trial balance and those which do not affect the trial balance. And we also did the suspense account. You must also make reference to a series number 4, where I explained the types of depreciation methods that can be used to calculate depreciation. And I also explained what depreciation is. And I also explained how to prepare the allowance for depreciation account. So today now, the focus will be the disposal account, which we didn't do in the other videos, and also the allowance for depreciation and the asset account. So today we'll look at a question that I'm sharing on the screen. So we have the question 27.4. A company depreciates its plant at the rate of 25% per annum straight line method for each month of ownership. From the following details, draw up the plant account and the provision for depreciation account for each of the years 20x4, 20x5, 20x6, and 20x7. So in 20x4, bought plant costing 26 on 1 January, bought plant costing 21 on 1 October, bought plant costing 2,800 on 1 September, 20x7 sold plant which had been bought for 26 on 1 January, 20x4 for the sum of 810 on 31st August. So we can look at the asset account first. So the asset account here is basically done as follows. So we have the asset account here is, this is the plant. I want you to follow properly. The plant account. We have, this is the debit side, and this is the credit side. So we have, on one, there was no opening balance. So on 1 January 20x4, there was an acquisition, which is bank. That is 26 So you debit the asset account which is receiving and you credit the bank account which is giving. In the same year, another asset was acquired on 1 October, X4, that is bank. So there it is 2-1. So in this year, only that was the activity. So you need to balance this account. So we have, this is 4-7. The total is transferred on the other side, 4-7. At the end of the year, 31st December, X4, this will be the balance. Balance carried down, 4-7. The following year, which will be 1st January, X5, this is the balance brought down, which will be 4-7. Is that okay now? So in 20X5, there was no activity, so you can balance. 31st December X5. The balance brought, carried down, which is 4-7. In the following year, the balance is brought down, X6. That is balance brought down, which will be 4-7. In 20X6, there was an activity, and this activity was on 1 September, X6. An asset was bought, bank, which is 2-8, the debit. There was only one activity in 20X6, so you need to balance. So here we have 5, and there we have 7. That is the total, 7-5. The balance at the end of the year, which will be the balance carried down, which is 7-5. In the following year, that is 1st January, X7, we have the balance brought down, which will be 7-5. Now, there was an asset that was sold. Sold plant which had been bought for that. So now I want you to understand, when an asset is sold, it must be removed from the asset account. And you always remove the original cost of the asset by crediting. So you credit the asset account and debit the disposal account. So this was on one that was sold on 31st August. So 31st August X7, this will be disposal. And the asset which was acquired was 2-6. So you remove the 2-6. So the common mistakes which students make, they want to show the disposal amount. No, the disposal proceeds does not go to the asset account, it goes to the disposal account. So we balance this account. So we have 75. And the balance at the end of this year, the balance carried down is how much? Balance carried down is how much? Can check it up. So the 75 less 2649. And in the following year, X8, this will be the balance brought down, which is 49. So we have done the first task of preparing the plant account. So the next task will be the preparation of the allowance for depreciation. So we are going now to prepare the allowance for depreciation, but before you prepare that account, you need first to calculate depreciation. And depreciation is calculated for each, calculated at the end of each year. That is very important. Calculated at the end of each year. The method they are using is for each month of ownership. So let's go to the calculation of depreciation. Okay, so we can move to calculation of depreciation. There. At the end of 31st December, X4, the depreciation will be according to the assets available at that date. The asset available there was the one that was acquired on 1 January, X4, and this was 26. Multiplied by 0.25. 25, there we have 650. The other asset was acquired on 1 October, X4. This asset, the depreciation will be for each month of ownership from October to 31st December. That will be 3 months. So this will be 21 multiplied by 25%, scale down to 3 months. And this will be 131, rounding off. And the total there is 781. That will be the depreciation for 20X4. Now we go to 31st December 20X5. The depreciation here will be, this asset is still there. The one which was acquired on 1 January. So the depreciation will still be the same. So it will be 650. Then the one which was acquired on 1 October, X4, now it is used in full in 20X5. So it will be full year depreciation. Full year depreciation there will be 525. Total there will be 1175. And now we go to, in 20X5, there was no activity, no asset was acquired. So now we go to 31st December 20X6. The asset acquired on 1 January X4 is still available. So the depreciation will be full year's depreciation. And this will be 650. Then the asset acquired on 1 October X5, it is still available, and the depreciation will be full year, which will be 525. In 20X6, an asset was bought on 1 September. So this is 1 September X6, and this was 28. And this asset was owned for how long? This was owned for 4 months. So the depreciation will be restricted to 4 months. So there we are going to have 233. Total will be 1,408. Then now we got to 31st December X7. In 20X7, an asset that was acquired on 1 January 20X4 was sold on 31st August, which means the depreciation will be on for each month of ownership from 1st January 20X7 to 31st August 20X7. So that will be 8 months. So this depreciation here of this asset, which was acquired on that date, the depreciation now will be for 8 months. And that will give us how much? That is 433. The other assets are still there. We have the one which was acquired on 1 October. X5, that was 2-1. It is still available. And the depreciation before the full year, which will be 525. And the other asset that was acquired on 1 September, X6, that was 28. It is now for the full year. And for the full year, that is still there, it will be 700. So the total depreciation will be 1658. So now, after you have calculated depreciation, that's when now you go to the allowance for depreciation account. Allowance for depreciation account. So we are going now to prepare the allowance for depreciation account, which will be, we have to create the space for that. Let me just check the space here. We can use the other side so that we have the figures. Okay. So we have the allowance. Allowance for depreciation. Allowance for depreciation account. We have the debit side. We have the credit side. So at the end of 31st December, X4, there is P&L. How much? 781. 781 will be charged to the P&L. In the P&L, it will be debit. Here is credit. We balance. At the end of 20X4, there is a balance. Balance carried down, which will be 781. At the beginning of X5, there is the balance brought forward or brought down, 781. At the end of 20X5, there is P&L. P&L there will be 1175. Then you balance. The total there will be 1956, which is taken on the other side. At the end of 20X5, the balance carried down will be 1956. At the beginning of the year, 1X6, the balance brought forward will be 1956. At the end of 20X6, there is P&L, and that is 1408. The total there will be 364. The 364. At the end of that year, the balance will be carried down 3364. At the beginning of 20X7, the balance brought forward or down is 3365. And in 20X, at the end of 20X7, P&L will be this figure, 1658. Now remember, I want you to understand, when an asset is sold, the depreciation associated with that asset should be removed from the allowance for depreciation account by debiting. So the asset sold was this one. So you have to add that, plus that, plus that, plus this, okay, then plus that. So the total depreciation there must be removed from the asset. The total depreciation, if you add there, that was on 31st August X7 disposal. So the total depreciation there to be removed is 2383. That is the total depreciation for the asset sold, as indicated by encircling So now here we have the total there was 522. 522. And the closing balance, 31st. That is 31st December, X8. The balance carried down is 2639, which will come to this side on 1X8. The balance brought forward will be 2639. So now we have done the asset account, allowance for depreciation account. Now we need to do the disposal account. The disposal account. So we go to the disposal account. The disposal account, we can use this space to prepare the disposal account. Okay, I think that space is enough. Okay, so now we go to the disposal account. Plant disposal account. This is the debit side, and that is the credit side. So in the asset account, we credited the asset account with the value of the asset sold, the original cost. So here it will be debited. This is plant. It's coming from plant account. So here is debit 26. Depreciation on the disposal account, it was debited there. Here it will be credited. Depreciation 2383. Then this was sold for how much? 810. So at the bank, it was debited. Here it will be credited. So you start adding with the side which is bigger. Here it will be 26. Transferred on the other side, 26. There's no balance in the disposal account. It is the P&L. The balance there is 593, which is a loss. When the balancing figure is on the credit side, P&L, you credit. In the P&L, you debit expenses and losses. So here there was a loss on the disposal of the asset. So for today, I would encourage you, particularly the new subscribers, ensure that you hit the notification button so that you are able to receive the latest videos when they are available. Thank you for watching this video, and God bless you.